What's going on is Anton from AntonDaniels.com. I appreciate you guys for continuing to rock with me. Shout out to the bag chasers, yo. They did a phenomenal job, and we still got a lot more to go, so it's a lot more work to be taken care of. But I did a live stream last night, an exclusive live stream for the Patreon members. Winning. We building a business in there, brick and mortar from scratch. I'm funding it. It's probably going to cost me a little bit over $100,000 in order to be able to do so. I got a flight that I got to catch to Tampa next week. And the bag chasers are the ones that are putting this thing together and all of the hard work, and I'm guiding them to help them to understand how to build a business. So if you have not already, make sure you join on my Patreon. The link is in the description as well as pinned to the top of the chat. And we're going to get you set up. If you need to kick it with me personally, make sure you holler at me, AntonDaniels413@gmail.com. Email me, or you can go to my website, AntonDaniels.com. Click the email link. It's going to open up your email client, and we're going to get you set up. You know what I'm saying? But specifically today, I want to highlight and bring to light what's going on in the housing market. Now, one of the worst things that you can do is try to time the market. My investments that I make are forever. So I know I say 10, 15, 25 years down the line, that's the mindset that you need to have when you're looking to make an investment. But realistically, I don't plan on ever selling, because the minute that I sell, then I have to pay capital gains taxes on whatever it is that I'm investing in. But as far as real estate is concerned, housing market specifically, right? I don't believe that the housing market is going back to 2008 levels. Not at all. The economy is still kind of humming. You got 2 jobs for every person. Now, there are a lot of people that's over leveraged. They bought more house than they need. A lot of people are going with the 30-year, and then they go with the payment. I see ARMs going up. But let's be clear. This is never going back to 2008 levels. Not currently, as I see it right now, because I'm going to give you 3 reasons. Lending practices back then was absolutely horrid, right? If you go and watch the movie The Big Short, it could break that down. Or you can probably read the book. I got the book. I like the movie. But if you go and watch the movie The Big Short, it's actually a real depiction of what was happening back in 2006, 7, 8, all of the years leading up to the Great Recession, right? And nowadays, if you actually do some research to understand what's going on in the industry, the average credit score, they used to do what they called ninja loans back then. It was crazy. The average credit score nowadays for a person that's trying to get a mortgage as of the first quarter of this year was like 760 and above. 760 and above. Most people were at somewhere around 776 or something like that. But the lending practices today is much different than the lending practices of yesteryear. All right. Again, they were absolutely egregious. And so lending practices had to tighten up significantly as a result of the federal government and the failure of the banks, in which Obama and the Obama administration basically had to bail out the banks and bail out the economy, which is largely the beneficiaries of what it is that we see today. But people weren't as egregious now, or aren't as egregious now. They may be over leveraged, but they are largely a lot more responsible than they used to be. The problem is just that the interest rates and what it is, what's available, and then inflation combined with the fact that there is possibly a pending recession that's on the hand. Nothing like it was in 2008, and I don't see it going back to that level, so you can forget it. If you're waiting for it to get back to 2008 levels, you're going to be waiting forever and for your lifetime. Second reason, homeowners are doing okay, right? One of the things that we've seen during the pandemic is that everything could have went left, right? Everything could have went absolutely left. I will give Trump and then subsequently Biden credit for the whole forbearance thing when it came to mortgages, because it prevented a catastrophic situation. Now, I didn't necessarily care about the stimulus checks, but the forbearance prevented people from having to go into foreclosure or going severely delinquent as a result of not being able to pay their mortgage or their bills because of what was happening during the pandemic and nobody could go to work at the time. Obviously, we had some other residual effects that came along with that I absolutely disagree with, but homeowners are not egregiously delinquent like they was in 2007, 2008, where it was way above 10%, 40-year highs, 30-year highs of delinquencies. and that the majority of the people could not afford the mortgages that they did not really fully qualify for, and had bad credit scores. So today, even though there's a lot of people that's coming out of the forbearance situation, you got a lot of people that are still being able to pay their mortgage, and they've been able to renegotiate with the mortgage companies. And trust me, I know. I am in the business of banking. I participate in the business of banking, and I know a lot of people that work for a lot of banks, and we keep a close eye on different things because that informs how we need to pivot as far as our strategy of how it is that we're going to make money in the banking industry, right? People are not suffering and losing, even though foreclosures are up compared to during a time when forbearance was taking place. So there is a shift in the real estate market, but it's not largely because everybody is becoming delinquent. There are some homes that are coming on the market, but it's not necessarily at the levels or even remotely close to the levels that it was in 2008. Third, there is a decent amount of supply on hand. Housing prices is not going down, and largely that is because of a couple different reasons. You have a lot of institutional investors. I literally just read an article that said an institutional investor just bought like 134 homes, which I believe that should be illegal. I don't think that institutional investors should be able to drive up prices like that and price out everyday consumers, because that's not what the housing market was built for, right? It was built for people to be able to basically have wealth into their homes, which is where the majority of people's net worth lie, because that's why they say that's one of the biggest financial decisions that you're going to ever make in your life, which I disagree with that. I think the biggest financial decision that you ever make in your life is who you marry, personally, or who it is that you have relationships with, or who you put your seed in. But I digress. That's not what we're talking about right now. There is a decent amount of supply. Right now, what I'm reading in the market is that because of interest rates going up, which it is working, right? It is causing a disruption, and there is some temporary blowback as a result of Feds raising rates to try to stem inflation. More supply is coming into the market, but it's coming as a result of different reasons. Before, supply was coming in 2008 because of people not being able to afford their mortgage, and foreclosures are going up, and everybody trying to sell at the same time. That's not happening now. People are having a fear of missing out, and they're trying to capitalize off of the top of the market because they tried to time the market. Much different situation. Most people still can't afford their homes. Overwhelming majority of people can afford their homes. And if they're trying to sell, they're just trying to profit off it, not trying to get from under it as a result of signing up for something that they truly couldn't afford. So it's not so much of a supply and demand issue as it is the context as to why people are listing their homes. And people still not really listing their homes as much as they was in 2008. Again, it was people really finessing the market back then, but now it's more of an organic supply and demand issue, and that there is demand, but it's not demand based off of what the current mortgage rates are. If you could have got it at 2 and 3%, why would you get it now at 6 and 7% as the Fed continues to raise rate in order to fight inflation? You know what I'm saying? So, and again, there are a lot of institutional investors that are parking money in single family homes, especially as a result of what's going on in the stock market today. Is one of the safest plays, right? You can raise rents. Rents is going up egregiously. You can have, it's always going to be demand, and real estate is always going to be going up, even though the supply and demand is cyclical. But it's an opportunity for institutional investors to take advantage of and park their money. And so I think that there needs to be some economic policies and some policies on the state level that prevent institutional investors from really moving the way that they're moving. But I don't know. I don't care either way. I'm still buying land. I'm still buying properties, and I wait for good deals, and I don't necessarily try to time the market. I just make investments where investments need to be made. You know what I'm saying? So if you need to kick it with me personally, email me at antondaniels413@gmail.com. But I don't believe that rates are going back to recession type levels. You can forget it. You can absolutely forget it. Jesus. Anyways, make sure you join the Patreon, hit a like for the YouTube algorithm, and then make sure you subscribe to the channel if you haven't already. I love you. I appreciate you. I'm going to holler at you guys later. Peace.